This volatile trading week is coming to an end. InstaForex analysts are ready to share their vision of the market situation for the day ahead. As expected, Wall Street suffered losses yesterday. The benchmark indexes closed in the red under the pressure from a growing yields of US Treasuries. Investors are again stoking fears about a looming recession in light of the latest comments by the US policymakers. Wall Street indexes slipped for the second session in a row. The Dow Jones shed only 7 points or 0.02%. The Nasdaq fell 0.35% and the S&P 500 lost 0.3% to close at 3,946. The stock market opened a positive note on a Friday. The major stock indexes traded in the green in the New York pre-market. The S&P is likely to trade in the corridor between 3,910 and 4,040 points. On a Thursday, investors discovered a bad omen. Difference between the 2-year and the 10-year US Treasury yields inverted down by almost a percentage point. It warns of a looming recession. Fresh comments from the Fed policymakers dampen the risk-on mood. Esther George said that the central bank would hardly bring inflation down without stalling economic growth. She added that over her 40 years of service, she had never seen tightening which would not have entailed painful results. She also said that it was premature to rely on the termination of the rate increases, citing too high inflationary pressure. All in all, this year the Federal Reserve has already raised the funds rate from 0% to the range of 3.75 to 4%, including 4 jumbo rate hikes by 75 basis points, one after another. Inflation eased a bit in October, but the overall level of 7.7% is way above the target level of 2%. As for the economic calendar, market sentiment was spoiled by the weekly update on unemployment claims. This number declined by 4,000 to 222,000 last week. Factory activity in Philadelphia shrank in November more than expected. Following the US retail sales data released on Wednesday, the outlook for the stock market is not the best. Despite signs of a slowdown in inflation, the economy remains healthy, which provides the US Fed with the leverage to continue sharp rate hikes. Most market participants are betting on the rate hike by 50 basis points in December, though more investors expect a rate hike by 75 basis points. Investors welcomed upbeat corporate reports on a Thursday. Cisco's shares jumped by 5% because of the company upgraded its annual revenue forecast as it solved disruptions in supply chains. Macy's shares leapt by 15% after the company upgraded the annual revenue forecast amid beyond the demand for premium apparel and beauty products. Investors are monitoring the Twitter saga. They voice concern over the future of the popular social media because hundreds of employees left the company. New owner ELON MUSK issued an ultimatum for them: either they should continue working extra hours with a high load or leave. At the same time, Tesla shares grew 1.1% in the pre-market. Stocks of companies with a mega capitalization such as Apple, Microsoft, Amazon and Meta went up in the New York pre-market. Wall Street is regaining fragile optimism. There are no fundamentals for a revival of risky assets. Nevertheless, traders are not going to give up. Sentiment on Wall Street on Friday will depend on fresh data on existing home sales and new remarks by Fed policymakers. Besides, JD.com and US e-commerce giant is due to present its corporate report. The US dollar index retreated and settled at about 106.50, having edged down by 0.14% intraday. The index is expected to trade in the corridor between 105.90 and 107.10 today. Several Fed officials share their viewpoints that modest signs of easing inflation in October are not enough to soften aggressive monetary tightening. James Bullard was the last to blow out flames of hope. He believes that interest rates should be increased about 5% from the current 4% to provide appropriate conditions for taming inflation. Bullard stated that the current level is not tough yet. He suggested it could even stand at 5 or 7% because the regulator is committed to its crusade against inflation. Now, the Fed funds future still indicates the key interest rate about 5% next year for the first time after the unexpectedly soft inflation data last week. Yields of 2-year Treasuries again climbed to 4.5%. In this context, the US dollar perked up. Nevertheless, remarks from the Fed officials cannot set the stage for a new greenbacks rally. Perhaps market sentiment is vulnerable to the growing likelihood of a recession, despite expectations of a modest rise in unemployment rates next year. The US economy is likely to slip into recession. The Fed will find it complicated to pursue its hawkish policy during the economic downturn. Despite the shaky position on the US dollar, the Canadian dollar pair is also facing a challenge to assert strength. The USD CAD pair rose 0.10% intraday to trade at 1.3342. The intraday corridor is seen between 1.3300 and 1.3390. Foreign oil prices are putting a strain on the loonie. The benchmark oil grades are extending a losing streak. WTI dropped 4.5%. Brent crude lost 3.2% to fall to the lowest level in 4 weeks. Oil prices are under pressure due to fears about the waning demand and the further rate hike by the US Fed. COVID restrictions in China are accompanied by a gloomy forecast of a slowdown in the global economy, unveiled at the G20 summit. The recession prospects are reinforced by downbeat economic data from the UK and the Eurozone on inflation and economic sentiment. The benchmark oil grades are set to close on a Friday with weekly losses of 6 or 10%. The commodity-dependent loonie will hardly develop a rally. Cryptocurrencies are making another attempt to gain ground. Bitcoin has grown by 0.67% intraday to trade at $16,700. Altcoins are wavering between dips and gains. Despite vain efforts to recover, investors are still overwhelmed by the shock sparked by the crash of FTX. The information background is filled with worrisome news. The new request for the FTX bankruptcy reads that the fair value of the company's crypto assets is worth just $659,000. Crypto platform founder Sam Bankman-Fried stated that the value of $5.5 billion. Besides, reports showed that the FTX funds were used to purchase houses and other properties for the company executives and advisors. No wonder the crypto market will hardly be able to develop a rally. Bitcoin is testing the levels of $16,000 and $17,000. If the token fails to protect $16,000, the price will head for new lows. The breakout of the upper border is out of the question for the time being. To sum up, the overall market sentiment is vague, so financial instruments are drifting in a fog. We wish you to choose your positions with the gains before the weekend and see you online next week.